All right. What's up, everybody? Welcome back to another Market Open. Hello, hello, hello. Happy to be here, everybody. Happy that you are all here. Amit going beast mode. Good morning, friend. Philip, Cash King. Amit, thank you for these live streams. I tried to listen to Meet Kevin's live stream, and all he does is talk about his PP. Whenever I hear guys talk about the PPs, I know it's small. Oh, that's funny. Well, I like Meet Kevin. I think he works really, really hard in terms of his research, but it's fun to do live stream every day. So here we are. Hey, Bud, Ray, what's up? Iceman, what's up? Tior Patino Diaz, what's up? Shifan, what's up? Seth Roth, Ahad, Digital Blackada, or Afternoon in Europe, Quarantine Quartet, Dex, Harshit, hello. Now, I'm running off of very little sleep. I stayed up pretty much until 5 a.m. I fell asleep at 6 or 5:30, and I woke up at around 8:30. So it was an all-nighter for me. I was actually trying to go the entire night with no sleep, but by 5:30, I was like, all right, I kind of collapsed. I had a lot of stuff to do last night, a lot of things to get done. I will say this. One of the reasons I stayed up last night because I was finishing a video that I think is really important. I am breaking a piece of Palantir news today that no one on the internet has broken. It's pretty exciting. I stayed up all night making the video. And this is going to be a interesting, it'll be a cool video. It's nothing bad. It's like a fun kind of thing on Palantir. No one's really reported it. And so it'll be interesting. So that I stayed up all night to be able to create. I've seen no one on the internet talk about it. It just released a couple days ago, but no one's actually talked about it. And someone sent it to me. So I kind of had the exclusive on this. So it's kind of fun to make the video. So that'll be out, and you guys will be able to see it. Morning from Singapore. Wow. Thank you for being here from Singapore. Sanjay means the world. From the Netherlands. That's so crazy. Czech Republic. You know, I used to do this back in October. I used to tell people, comment where you're from and put it in the chat. Let's do that again today. Comment where you're from and put it in the chat. It's so fun to see people around the world. And ironically, the video I'm having to do with Palantir today has to do with something from an international format. So I hope you guys will enjoy it and see what's going on. Gabe, thank you for being here. Felicia, Lars, Troy, Uriel, Roy. All right, let's get into the market. We have Microsoft earnings. Microsoft earnings were not necessarily impressive. Honestly, it was a bit of a letdown, but there's nothing more that you could expect. Microsoft was up after hours yesterday. They are down to $234, down 3.31% today. Now, they barely beat on EPS, about $2.32 earnings per share versus $2.29. They missed on revenue slightly. I mean, the street was like, let's do 52.9 billion, and they did 52.7 billion. So I mean, the revenue beat the revenue miss was insignificant to me. But their guidance showed that they are just not going to grow at the level that people think they have the ability to be able to grow, even with the ChatGPT, OpenAI stuff that they're doing. Azure growth slowed down to 30%. Look, Azure, I think cloud is in its infancy, so I think Azure still has a long way to go, but I mean, growth has slowed down. And overall, they've guided that growth goes down. S&P down 1% to 396 from closing at 400 yesterday. So Microsoft earnings are done, and now we have Google, Amazon, Apple, and Meta that are going to turn, and Tesla, obviously, that are going to determine the fate of this market. This S&P level being at 400 could immediately be broken, collapse to 380, whatever it is, if those four tech companies are not able to put up the numbers or the guidance. Like Facebook's going to do $32 billion of revenue this quarter. Imagine if their guidance is, hey, we can only do 30 billion next quarter, or it's going to be flat. That means no growth. And then CapEx, capital expenditures, are up because of the metaverse stuff. That's going to, tick some investors off. It's going to be the same thing with Google, with what they're doing, and Apple and Amazon. So it's going to be very interesting to kind of see where the cards play when this all comes out. I did an all-nighter the other day, but it was really just the Addy. I have never done Adderall, and I don't get how people do it, bro. Like in college, everyone was like, let's do Adderall to stay up. I'm like, let's not do that. Like, that's just like, I've never done Adderall. Vincent, tell me that you have not slept amid. Vincent, I slept at like 6:30. So I got 5:30. So I got about 3 hours in. But I needed last night was one of those nights I just had to stay up. I had to get stuff done, had a lot of emails to answer, just a lot of, I had a meeting with my co-founder that took up an hour. So we're having a new design of our startup coming out within the next week or two. And I'm really excited about this because this new design is looking like a product I would actually use on a daily basis. Right now, there's just so many bugs on the platform. It's on a $24 template that we bought a year ago. So we got to rebuild the whole app from scratch, primarily because we were able to raise money, so we were afford to do so. So I'm excited to see what we can do. There's a question in the chat that I'm highlighting right now. Let's just say the answer is yes. But I don't know how to say your name. Acob. I'm sorry if I'm saying your name wrong, but yeah, that's the answer. Cameron, did you see you can't use your SoFi points for crypto anymore? I don't really invest in crypto, so I don't really care too much about that. But I guess people who do invest, I don't know why. I guess we'll talk about on the weekly why you can't use your SoFi points for crypto. I'd imagine it's because they want you to start like actually putting money in the app, but I'll take a look into it. But I just don't trade crypto too much, so it never really affected me. SoFi down 2.5% at 565. I have one cash secured put on this for March 17th for a strike price of $5. Nice little 6% return on that. So let's see if SoFi gets down to 5. I mean, even Palantir's collapsed. Yesterday went down to 613, went back up to 740. Now it's at 695. Let's see if we get another trade halt to this morning. If anything insane would happen. We got Neo at 1168, Shopify 42, and then Tesla. Tesla is down 1.86% in the pre-market. Look, man, this is gonna be a very interesting stream or day, and there's gonna be a lot of people streaming it to see if Tesla is able to beat. Elon Musk gave a little bit of an interview yesterday to the San Francisco press as he was leaving his court office, and they basically said, "Hey, how'd it go?" And he was like, "It went pretty well. I think it was pretty good." And so that was it. Amid feeling scratchy much, got to send you some Borderline from the mothership. I love it, Ishan. Palantir and SoFi are long plays. I agree. Amit, what do you think about the stock price after Palantir earnings? Look, I'm not expecting Palantir earnings to be good. EPS we're going to miss on. We have to do $503 million of revenue, which is let's do the math here. 503 minus 477. It is a 5.4% growth. Hold on. 477 times 0.054. Yeah, we have to do a 5.4% quarter over quarter growth. Last quarter, we were barely able to do like 0.01% or whatever, because we went from 475 million to 478 million. So we have to grow 5% in the quarter to justify getting 1.9 billion in revenue. And that would be, I think, a 23% year over year growth. So it's going to be, I mean, I don't know. I expect Palantir to tank, and I expect to just load up more when it does tank. And we'll see that from there. Amit, can you speak a little bit more about how you value companies? Yeah, I think for me, there's like two elements to it. Number one is, what is the qualitative story of the company? So if we go to something like a SoFi, on a qualitative perspective, do I see Gen Z in particular going to bank branches like Bank of America and Chase and like depositing things? Or do I see them setting up online digital banks and doing everything from that online digital bank because it's a one-stop shop to get everything done? I think the latter would happen if I'm thinking of this from a long-term play. So like, first of all, I value companies from, am I long or am I short term? If I'm usually long, which I tend to be, and I think most people tend to be, then it's the qualitative question of, why am I long? What is the like emotional reason why I'm attached to this argument? The Galileo products in SoFi, making it the quote unquote AWS of fintech, I think are barely even touched the surface. And that was the core reason I invested over the personal banking stuff. But as I've gone deeper into their growth, I mean, SoFi might put up 500,000 members the next quarter, which is, going to be pretty interesting to see how the market reacts to that. Which goes to my second point, which is how much are they growing, right? And then you get into some of the core questions on, are they profitable? What is their operating margin? Is there a price to free cash flow that makes sense to be able to pay for because of the justified growth? And, SoFi has been able to hit it out of the park. Palantir this year is probably not growing, maybe 22% this year. The goal is, can these guys grow 40, 50, 60%? And then I think the third thing is like management. Obviously, I'm betting on Anthony Noto. I'm betting on Alex Karp. And if I'm wrong, I'm wrong. But I don't want to be wrong because I bet on, Black Sky. And I barely know the name of the CEO of Black Sky. But there's a really cool product, but I'm not going to bet on them because I have no idea what they do. So, I have no connection to the leaders. Like Spotify, say what you want about it. Daniel Ek is a hardcore MFer. And if you're going to bet on Spotify, you're betting on that guy to get the job done even more than the business itself. So I would say the qualitative aspects, the ability for them to grow, which includes all those numbers, and then management at the end of the day. All right, January 25th, 2023, 9:30 a.m., 25 days into the new year. The stock market is now open. Wake your ass up. We've got a lot of red. Palantir down 2.21% at 686. S&P at 395. We had a lot of green for the past 2 weeks. We are getting down into the red today. SoFi down about 3.6%. Amazon, look at this, down 3.6%. The market did not like Microsoft, and they are not giving any of other big tech the ability for them to feel to feel a little bit of love. Microsoft down 3.1% now at $234. Market cap under 2 trillion. I think it was under 2 trillion for a while, but first time I'm noticing 1.75 trillion. Look, you're paying 25 times on a forward PE basis for 2% growth. That's not sustainable. I don't know how long Microsoft can hold. I don't know how many investors are going to put their money. When you've got something like Tesla that's trading at the same PE as Microsoft. So Microsoft's what, 24? Let's look at Tesla. I think it's like 26 maybe. Tesla's at, Tesla's at 35. And that's because they were at 140. When they were at 110, that's when it was back to 25. But they're growing 40% year over year. So you're willing to pay that extra 10 in price to earnings because they're growing 40%, whereas Microsoft's growing 2%, right? So I mean, the market is not satisfied with what Microsoft's putting up right now. Now, granted, long term, do you bet against Microsoft? Probably not. But like over the next 2-3 years, do you think this can double to a $4 trillion market cap? I don't know. It's harder to imagine that doubling versus Tesla going from 400 billion now as a market cap to 800 billion, which it was able to do before. You got Netflix at 361, up 0.51%. NASDAQ down 200 points on the day. That's a steep little decline for the NASDAQ, down 1.72%. Whenever the indices are down 1%, it means you've got hundreds of points that have likely collapsed from that indice. And so that usually is bad for the market. You got Spotify at 96, 3.07%. Snapchat 988, looking more like the market we're used to. Enphase, there we go. Enphase is collapsing down to the 200s. It started this week off, I think, at 250, and it's slowly just collapsed as everyone has, at least if you're part of this channel, we've pretty much expected. I mean, even Vitaly, who's one of the biggest Enphase bulls, has said this price is way too expensive. So Enphase will be interesting if we can get it down to 200 and maybe a little bit under 200. It's a stock that's growing, Matt, and when there's a bull market, this baby runs. Now, insider dilution and insider selling, I need to look into a little bit more, but the fundamentals on Enphase from the DD I've done and the people I've talked to, it's a nice company. I mean, it's one of Meet Kevin's PP stocks. It's like he's been big on it for a while. Granted, again, could it still be a little bit more overvalued at this stage? Potentially. What is it? Their PE is at 46. Now, their year-over-year growth, I don't have the exact numbers, but I think it's north of 60%. So it might be, they could argue that's why it's justified, but we will go into it. Palantir puts printing, of course. What's your number on Enphase? Meatface says 160. Yeah, I mean, I'd agree with 160. Like 160 to 180. I think it could hit a strong level of support at 180 and then go from there. But if it gets down to 160, that would be really, that would be good. That would be something I would look into. Zoom at 67, Roku at 49. We haven't heard the Kathy stocks make that much noise. And remember, these are positions she has, multi either $4 to $5 billion worth of it, or at least $1 or $2 billion that has collapsed now to like 500-600 million in terms of market value. But those are big companies that I've not heard any noise from at all. Roku, Zoom, Coinbase, nothing. So we'll see how those go. Robinhood, this is a stock that I want to buy because I use it every day. And I'm just like, at one point, do I see Robinhood going from $9 to $20? It's a market cap of $8 billion. Could I see them getting to 16 billion? Yeah, I think I could, could I see that happening? Especially because their transaction volume has not slowed down and their equities and options trading volume actually went up last quarter. Like it went up last quarter. You would think like, why? Like the market's collapsing. Why are people trading? But like on Robinhood, people are trading. Now, if they can build out some I have a video on a YouTube channel called 6 Ways to Save Robinhood. And I outlined a bunch of different things I think they can do to save the company. If they implemented some of those things, I would be really excited. In fact, one of those suggestions was, I think Robinhood should just become the next CNBC. I really think, what is CNBC worth? You could call them $1 billion, maybe 500 million, 700 million, if you just put that company outside of the broader Viacom, CBS network, or NBC network. What if Robinhood just built a media company internally and had every show sponsored by Robinhood? What if Robinhood acquired a company like StockTwits, which is a social media platform where people are trading stock? Like, I think there's so many different things they can do. Obviously, they're not profitable right now, and you can't do an acquisition because the market, is going to kill you if you try to do an acquisition while you're borrowing money essentially with these interest rates. But I think there's a lot of things they can build internally because the app is already so sticky. It's already so sticky for traders, at least, for retail traders that are using it. Square up 30% in a month. Wow, that's not bad. Square, Sean is one of my friends. He's very bullish on Square. I am not. I've never been that bullish on Square because I know they're trying to do the whole Bitcoin play, and again, I'm just not that super bullish on that. But from a fintech perspective, it's probably one of the best fintechs out there. I would put them up there, but they're obviously above SoFi right now. Nubank, like Square created Cash App. They created the ability to do digital payments on that little box that they put in retailers. Let's take a look at this Elon Musk tweet trial. What we know so far, obviously, this affects Tesla deeply. What happens at the outcome of the trial? So let's take a look at this.
Joining us right now is Dan Primack, who is Axios business editor. And Dan, this is the stuff of soap operas. You hear things that come out on the stand. You find out about all kinds of details that people have speculated on to this point. What did you think?
I thought, for starters, soap opera, yes, but a god-awful should be canceled soap opera. It's been extraordinarily boring. And honestly, I'm somebody who cares about this, right? And should be interested in listening. I find myself kind of spacing out and dozing off. I can't imagine what the jury is thinking. Ultimately, though, this really comes down not to what Elon tweeted and even what was true, because the judge has already ruled the tweet was untrue and that it was reckless. It's what was in Elon's mind, which is why the ultimate verdict here, who knows? He has to have believed it was untrue, not just that it was untrue. He had to be thinking he was essentially committing fraud.
Well, that's an impossibly high bar. They're never going to get over that.
Obviously, the plaintiff's lawyers think they can. I will say he has let a couple things slip, and it almost feels like the plaintiff attorney's strategy is to keep asking questions over and over, and this email and this conversation in the hopes that Elon will get tired and let something slip. And on the second day, he did at one point acknowledge that he thought his tweet would help the stock price go up. It was one little thing. He kind of denied that for a while, but at one point he said that. My guess is the plaintiff's attorneys are going to hammer that in close.
Whoops. Dan, if you're bored by this, how do you think Elon Musk feels through going through all this?
He seems bored by it on the stand, although, again, it's unclear if his kind of strategy is to be very monotone and appear bored. I will say, before his first day of testimony, and you never know exactly when you're going to get called for one of these things, there were witnesses before him. Like 10, 15 minutes before he took the stand, he was tweeting about things that had nothing to do with this. I think stuff about Twitter, maybe stuff about Tesla, but not about any of the trial. He seems kind of annoyed by it. Which again goes to this question of state of mind, what his real goal was. I will say his explanation for why he tweeted funding secured just strikes me as odd. He's kind of said that there had been a leak to the Financial Times about how the Saudis had taken a stake in Tesla. And so he was concerned there could be a new leak that he was thinking about doing a take private. And thus, well, if you're a Tesla shareholder and some of you read the FT and some of you don't, that would be, undemocratic for Tesla shareholders. But Tesla has an IR department. At the time, it had a comms department. He could have simply asked them to, put out a statement to the SEC and a public statement, et cetera. He did none of that.
Yeah, and I would guess not all Tesla shareholders are on Twitter either.
Correct, yeah.
Dan, how much of a distraction has this become on top of the distraction that is Twitter, that he now owns as well? I think that's the biggest question for Tesla shareholders on this. If he is a key man and he is the most important part of that company, and you're only getting part of his time and part of his brain at this point, and it's an ever shrinking part of it because he's got so many other things he's doing, including, getting dragged in for depositions and getting dragged in for court appearances like this.
We'll start with, he doesn't seem to sleep as much as a normal person does. That seems to be clear. He seems to.
Although he has said he tries to sleep 7 hours because he tried less and it wasn't very productive.
Mm-hmm. Then I'm amazed if he can pull that off, given the amount of time he seems to be doing things. I guess the argument would be right now, if you're a Tesla shareholder, how much of that really do you believe is Elon Musk specifically, as opposed to the people who are actually there day to day at Tesla? If you're betting on Elon and that's the reason you're a Tesla shareholder, I'd be surprised you're still a Tesla shareholder. He clearly has, very split time. At best, he could be spending a third of his time, maybe sometimes half of his time there. And the bigger issue I would think with shareholders with this particular lawsuit is it could be a major hit to Tesla in terms of money. We have no idea what the damages could be, but it could be substantial.
This was interesting. So I didn't know. I actually enjoyed listening to that because it seems like Elon gives zero craps about this trial. And I didn't know that the defense needed him to basically admit that that he had some intention of raising the stock price with that tweet, which obviously he did. He's not going to admit it though. So he's just gotta make sure he doesn't admit it. But it's funny, right? Like that's what their defense relies on. Even if he loses this, what really is the financial impact on Tesla? Like how many actual, maybe at best $1 billion, which is reaching. And like, yeah, that's bad, but I mean, like, I don't know. I feel like Elon is the best lawyers in the world. It's going to be hard to justify that he was intentionally trying to destroy the company and make retail, traders lose their money because of that tweet. Versus it was an erratic tweet just because he said it. It's so funny. I interviewed the CEO of Wejo, Richard Barlow, last week, and they still haven't given me clearance to upload the video because they care so deeply about like what he says and like the public disclosures and all that stuff. And like they should, right? Because it's a public company. And then you got Elon, who gives zero craps. And it's just, it's amazing to see one guy just give the middle finger to everybody and just do it his own way. I mean, it's the hero's journey. It's a beautiful thing to see, regardless of some of the consequences. Coinbase at 51. Market cap of Coinbase is 11 billion. They did about 3 billion in revenue last year, or 3.4, something like that. So they have a price to sales of 2.3. They are not profitable, so they don't have a price to earnings. They are negative in that respect. Coinbase has always been interesting. It looks a little bit, it hit 38. So if the market goes down a little bit more, 38 would be probably a better entry point if you're super long Coinbase. Because I like, if Bitcoin collapses tomorrow, Coinbase collapses as well. And so the question is, well, does anyone see a Bitcoin collapse coming? Now, I've talked to a couple of people who are looking at it from a pure technical perspective. And they're like, there's absolutely a Bitcoin collapse coming, or at least some version of a Bitcoin collapse not being maintained at 22,000. But it's rallied quite nicely. Here we go. On 11/29, we're at 15,998. It's rallied nicely since then. Question is if it can maintain that growth. What else we got? Nvidia was at 192. It's stuck at 191. So investors are not letting Nvidia crash yet. AMD, same thing. Roblox, interesting company. I haven't looked at it for a while. They are not profitable, so they do not have a price to earnings. Price to sales of 9 right now. And market cap of 21 billion. I actually had a friend who came over to my house the other day. He's in 5th grade. Not like a friend. Like I had a family friend, and his son was there. And I told him to show me Roblox on his phone for the first time because I'd never seen this thing. And it was interesting. It was a cool little thing. I mean, is it worth 21 billion? I don't know. I mean, obviously they have a lot of users, right? I'm not in that demographic, but it was interesting to see that. Because I'd never seen that before at all. Greetings from Germany. First time live commentating. Grown Plays. Thank you for being here. I appreciate you being here from Germany. Let's see some of the other things we have going on in the news. Oh, Boeing posted earnings. Okay, so let's take a look at Boeing's earnings. This gives a little bit of an understanding of where the flight demand is from an economic perspective, and where people are traveling and if they're traveling as much. So Boeing posted a loss in the fourth quarter as supply chain issues weighed on results. They generated $3.1 billion in cash flow, which was higher than analyst perspectives, but they lost $663 million. They're producing 31 of its 737 jets a month and plans to increase that to about 50 a month by 2025 or 2026. So they're producing 30 jets a month. For the full year, Boeing had a loss of $5 billion despite a 7%. Wow. So Boeing did $66 billion in revenue, up 7% year over year, while they lost $5 billion. Revenue was $19 billion in the quarter versus $20 billion, and adjusted loss per share was $1.75 versus 26 cents. Interesting. Now, Boeing doesn't affect that many other aspects of the economy, like at least from a stock market perspective, but it is one of those stocks that I remember Boeing got to like a ridiculous level at $88 at one point. Let's look at Boeing real quick. I remember during COVID 2020, it got bad. Let's go to Boeing. I even had Boeing for a little bit, and then I sold it. Was it here? No, it was right here. Yeah, it was right here. We got down to 149. I think we got lower. Yeah, 80 right there. This red candle, 86. I remember seeing that there. Then it ran up, got to a high of 257. Then it ran down. Then it collapsed to 113 back in June, and now it's back up at 211. So June and October have been the bottoms so far for the stock market. And now it's a question of can we hit? And to be honest, as much as I love the green, I really wouldn't mind an opportunity for us to get back to the October lows. Because if it all collapses, I still have cash. I know a lot of people still have cash. Now I think more people, if we get a third blessing, a third opportunity to go in, I think people wouldn't make that mistake. Even if it goes lower than October lows, like let's say 20% lower, I still think people would be happy if they get to buy in with Meta at $88 and Tesla at $100, et cetera, et cetera. Palantir down to $596. But I don't know if the market lets us get that low again. It would be pretty interesting to see if that happens. Roblox is an evil company. 0 out of 10 would never invest. Okay, I don't have that strong of an opinion on Roblox. I can look into some of the evil things they might have done. Google, I go 27 massage therapists, bro. The amount of TikToks I've seen of day in the life people at Google saying, and at 4:30 I get a little stressed, so then I go and I get a massage. I'm just like, oh my goodness, like there is a reason people that work at big tech companies are soft, bro. Like you get a massage at the end of the day, like that's wild. Like I'm not saying it's a bad thing. It's just yeah, Google had to let some of these people go because people don't need as many massages. Admit you only buy on green days. You would never buy Palantir and Tesla on the new 52-week lows. Well, this is factually incorrect because I bought Palantir at its 52-week low. But yeah, you're right. I mean, like, look, I've got to learn how to train myself to buy when it's red as well. I'm not perfect in that respect, and I've got to do it. I agree with you. It's hard for the most serious of investors to buy. Also, granted, I've been the reason I don't get this argument as well when people say you buy on green days and not buy on red. I have been buying the dip for a year. I mean, go back to all my videos. I was buying the dip at Palantir at 15. I was buying the dip heavily after Q2 earnings 2022 at 12 and 13 and then 9 and 10 if you go back to May and June. So at some level, like, yeah, I've bought the dip a lot and it just unfortunately kept dipping. And so there's, at some level, I have a limited amount of capital. I want to be a little conservative with it. Not everyone feels excited to just dump it in at the quote unquote 52-week low when you don't know if it's a 52-week low because you thought you already did that at 12, 13, at 158 on Tesla. And then it just keeps going lower, But obviously the sentiment is right. When things go lower, you keep buying. That's it. You keep buying. You're not taking Warren's advice. No, I want to. Will Nick Agrasia celebrate the Tesla earnings today with 1 Tesla share? No, I will wait till the numbers. Let's see if we can put something up. My gut is that numbers are good, but the market still tanks it. And that's when I will celebrate. By the way, I'm doing a live stream with Tevis. He's a fundamental investing podcast after earnings. So don't worry. You don't have to be interrupted during earnings. But after earnings, we'll talk and we'll break down the numbers. He's had Tesla's 50% of his portfolio for like 3-4 years. So he is someone that will be very knowledgeable in breaking down the numbers. But I will buy after the earnings. Let's see the numbers. That's it. Let's see the numbers. Okay, so let's go back to some of the talking heads and see what they're talking about. And then we will go from there. Shout out to 292 people being here. It makes my day every morning to talk to 300 people in the morning. Like, that's just super, super cool. So thank you for being here. Now, let's take a look at a little bit of a bearish argument. Tesla's valuation is irrational. Either this video can be it's too cheap or it's too pricey. So we will see. I think it might be someone saying it's too pricey. What's the Palantir news you were hiding? Oh, yeah, by the way. So I didn't say this. I said this at the beginning when there was only 100 people here. I am breaking a piece of Palantir news today that no one on the internet has broken. That's why I stayed up all night making that video. It's really fun in the night when you know you're like 8 hours away from putting something out into the world that is brand new that no one's ever seen. Like, it's a really cool kind of creative feeling for someone who, considers himself to be pretty creative and coming up with ideas and stuff. It's nothing bad. It's just something that was sent to me that was not covered by any of the press on like YouTube or Retail Traders or any of the like Seeking Alpha, any of those websites. And so I think I've got the exclusive on this. So it'll be pretty fun. You guys will see it. It'll be a little cool video. All right, let's take a look at this video.
Here to debate whether now is a good time to buy and own Tesla shares, Garrett Nelson of CFRA. He has a $210 price target on the stock, rates at a strong buy. And Craig Irwin of Roth Capital, he has an $85 price target and rates Tesla a hold. Craig, how long you been that bearish on Tesla? It's a long way from your price target.
Yeah, you remember it's been about close to 2 years that I've been saying as Tesla became egregiously overvalued, that it was not long-term sustainable. They do not operate in a vacuum. They're going to be 500 EVs on the road by 2025. And yeah, they deserve a lot of credit for creating the market, basically. But we need to bring some rationality, some logic to valuation. And Toyota's smaller market cap, and Tesla doesn't have anything that Toyota doesn't. That's kind of irrational valuation in my view.
Garrett, do you think that Tesla has something that Toyota doesn't have? That has been the bull case for a long time, that Tesla has something that nobody else has.
Absolutely, we do. And it's their battery technology, it's their innovation. It's the fact they produce the two best-selling EVs in the U.S. by a wide margin, the Model 3 and the Model Y. And, we view the stock's valuation as highly compelling at these levels. Remember, Tesla fell by 65% last year. It was a broad-based EV sell-off. So its decline wasn't as bad as some of its peers, such as Lucid and Rivian, both of which fell by 82%. But we feel that so much of the headwinds are priced in at these levels that it's really a compelling buy. And investors will be glad that they bought this stock at these levels, looking down the road, 1, 3, 5 years from now.
There are some headwinds, though.
And that I think can't be denied for anybody, right? I think investors will be very happy buying at least Tesla, if not a handful of other stocks, 3 years from now. But everyone's worried if it's at 140, what happens if it drops to 100 and I bought it at 140, which is not the right mindset to be in. But nonetheless, like getting Tesla at 140, $400 billion market cap. If you really believe in Tesla, which is, it's not hard to believe given the numbers, 40% year-over-year growth, an EPS of potentially expected $5 or $6 per share next year, then you could imagine that this would be a nice investment 3-4 years from now.
You acknowledge, Garrett, what are can you summarize the top 3 headwinds? I mean, is it good for market share that you see prices discounted? Is it are supply constraints, are those still affecting deliveries so that they're not going to be what had been promised? And what about Mr. Musk's other interests, if you will?
No, I think you just reeled off the major concerns there. It's really demand has been a major worry of investors. Production, Tesla's quarterly production has exceeded its sales for the last 3 quarters. So they've built some inventory. But what they've done to respond is cut prices, which they just announced a week or 2 ago. And also, the company's lower priced Model 3 and Model Y vehicles are now eligible for a $7,500 federal EV tax credit. So we think those 2 things are really helping stimulate their sales. We're seeing that anecdotally in some of the sales data that we've seen recently. As far as Elon's interest in Twitter, that's still the number one headwind for the stock. Just the uncertainty regarding whether he might possibly sell additional Tesla shares at some point down the road in order to continue to fund Twitter's operations.
Okay, so that is the story. I think that 2 people, that are 2 perspectives are mentioning when it comes to Tesla. Either you believe that at these levels, they're producing way more than they have demand for, and that cutting prices is going to lead them to not really have any level of competition, or you believe the other side, which is that the forward earnings on the stock is just exaggerated because they are simply not getting revenue from technology. Now, obviously, if you believe in Tesla, you believe in FSD. Even Elon Musk has said Tesla is nothing without FSD, which means all they need to do is get cars on the road and boom, they make FSD, and that's how it works out. I mean, that's the bull case. And so it's a question of, is that something you believe? Let's take a look at Elon Musk. Tesla is setting up a gigafactory in Nevada. They're investing $3.6 billion and they are making 3,000 jobs as a result of this. This is the mayor or the governor talking about Elon's 13 seconds.
Elon's here to change the world. I'm here to change your life.
Well, I just make clear, I'm just I get way too much credit. If the credit is theirs.
No, I understand that. Elon's here to change.
That's a nice moment. That's nice. He's basically saying, no, I get it, bro. But you're the dude that's bringing all these jobs. You're the guy that's here. So this is why it's matter. This is why it matters. But in this type of macro, good news doesn't matter. Bad news gets amplified. I agree. 100%. Yeah, and that's why I think, there's a really good chance. I think most Tesla bulls would agree with me that the stock tanks, even on some good news. I mean, like, obviously, we know their deliveries for the year. We know their production values for the year. I think operating margins and profitability, those are going to be the core numbers. What Elon actually says. Even Dan Ives said that, let me pull up his tweet. He said this is one of the most pivotal earnings calls ever in the history of Tesla because of the particular situation that they are in. Let me pull up that tweet right now. This was yesterday. And I think, yeah, so he said, while every quarter is important for Tesla, we would highlight tomorrow's call guidance commentary as one of the most important moments in the history of Tesla and for Musk. Delivery targets for 2023, auto gross margins, and Musk commentary outlook is key tomorrow. Now, look, obviously, I think the reason it's also important is because remember late December, you had Ross Gerber, Gary Black, all of these big figures in the Tesla community getting on Twitter Spaces, basically crying their hearts out about why Tesla has collapsed at such an astronomical level. By the way, it was at 140 during that time. Then by January, it collapsed all the way down to 100. And now it's at 140. Sentiment has changed because you give more than you take, and people get a little bit more happier at that point. So that crying from a lot of the big retail, or not, some of the institutional rock stars, I would call them, of the Tesla community has died down a little bit. You had even Tesla Economist, which is one of the most famous Tesla retail investors, sell and take a $10 million loss. So, I mean, this earnings call will definitely be, this earnings call is definitely important because all of those people over the past couple of months have really been crying about what's happened to the stock. And Elon's been like, yo, it's the macro. I don't know what you want me to say. It's the macro. Sold all my Google shares for a small profit. Expect the 80s again on Google. Wow. Okay. So you think 80s again on Google. Someone said, oh, Dia, you don't have the verification email. We are fixing something in AWS, so you will get the verification email hopefully within a week. It's something in AWS that's not letting us send emails, but you will get that soon. Enphase 205. All right, Enphase 205. $5 more. Let's get down to the 200s. Let's get down there. I will probably begin my first DCA at 180 on Enphase. I would like that. Just to start having some skin in the game on that stock. And we'll see how low it can go from there. Do you think Elon pumps Tesla to sell so he can use that cash for his other companies? He's the best at pumping stock. It's still an auto company. Well, I disagree that it's an auto company. I mean, when he said the Saudi Aramco Apple comment on the last earnings that got investors really excited, look, I don't think he was trying to pump it intentionally. I think he's been very honest about the fact that Tesla can be the most valuable company in the world. And so if he makes one comment and the rest of the community takes it the way they take it, that's people are going to do what they're going to do. I do not think he is selling any more Tesla stock. If he sells Tesla stock again, I think the trust between him and the community will be at such a abysmal level that it'll be hard to recover from that, because he promised he wasn't going to do it. He sold. This time he officially went, word for word on Twitter Spaces, said, I am not selling until 2025, or at least for the next 18 months. Could that change? Yeah, but I don't think at this during this macroeconomic environment he would do that. I don't think so. What amount would you sell Audia for right now? It's an interesting question. Look, I first of all, I don't think Audia is worth anything substantial because it needs to be built. But I think one day if we build the product I think we can build, there will be a Spotify or an Amazon or a Google that would be really interested in picking this bad boy up. And I think it would be in the hundreds of millions. Now, that's going to be very hard to do, and the probability of that is very low. But it'll be really cool if we do it and I get to watch this video 7 years from now. And I'm like, that's my bull case for it. Like I wouldn't want to sell this for like 25 million, 50 million. Like that would be amazing. But like, I think it'd be a product that can hit hundreds of millions of users. I really do. And so, and I think the potential we've shown, I mean, we just had our first 1,000 listen day on Audia 2 days ago. So I think there's a lot of potential. I haven't even touched the surface of it. So I'm excited to keep building. He said he wasn't selling for 18 months. Yeah. So that's my point. If he pumps it up and then sells soon, that would not be good. People would be really sad about that, especially if it's to fund Twitter. And I think he's figuring out the Twitter, issues that are going on, but in terms of their revenue. So, we'll see if he can figure it out. Let's go to Webull. Take a look at Tesla. Boeing 209 down 1%. Tesla, wow, Tesla down to 138, down 3.4%. So it's down from the 140s. Investors are obviously feeling a little scared before earnings. Microsoft at 4.39%. Microsoft just lost $300 billion of revenue since market cap since or $200 billion since I started the live stream. They were a $1.75 trillion company at 9:30. They're now a $1.73 trillion company. Wow. It's gone right there in an instant. 1.7. Is that 200 million or 200 billion? No, 200 million. I'm sorry. Okay, that makes more sense. 200 billion is a little bit too much. Now it's 300 million. It's 100 million, not 100 billion. And if they lost 200 billion worth of market cap in 3 minutes, there would probably be an issue with Microsoft. But that's crazy, man. In a couple of minutes, $300 million disappears. So the market is not happy with Microsoft. SoFi down a bit. S&P to 394. NEO Amazon 91, Uber 28, Netflix. I keep looking at Netflix and I'm like, oh my goodness, Netflix is all right. Hold on. I want to show you guys something. Actually. Let me show you guys something real quick. So I have, I think this will be really interesting. I have a subscriber that named Intern Investing. Okay. And I'm not sponsored by this at all. I have no affiliate link. I have nothing for this. I have absolutely nothing for this. These guys are early creators on Audia, which is why I love them, because they make great content. They have a channel on YouTube called Intern Investing. They have about 1,000 subs. I would really check them out. They just gave me this product to try out. Again, not sponsored, no money. This is literally, they even asked to sponsor me. I was like, no, I do not want your money. I don't want to take your money. You guys, I love you guys. You're awesome. And I was playing with it last night. This is the first time I started playing with it last night. It's called Mainstream Financial Data. And I texted him last night at 3 a.m. Let me actually show you guys this so you guys don't think I'm lying. I want you guys to literally see I texted him at 3 a.m. So let me show you my Twitter DMs real quick. So boom, right there. I said, bro, this product is legit. Just played around. The UI is super easy to use and the consumption of data behind is awesome. The thing has serious potential. I really like using it. And the ease of consuming information is awesome. And I texted this at 3 a.m. because I was like, this is a really interesting product. So the reason I'm saying this is because we're going to look at Netflix's numbers right here. I think they have a really interesting way of presenting a lot of different things around companies. It's like a stock analyzer tool. They just have a really unique way of kind of showing the information that I haven't seen before. So let's go to some of the ratios on Netflix. Okay. So let's do a different one because let's go to financials. Okay. We'll just start with financials, then we'll go from there. So this is Netflix's revenue, gross profit, and operating income. As you can see, in 2021, when they were doing revenues of about $28 billion a year, they were doing profits of only close to around $2 billion per year. And at that level, investors were paying, I think, 200 times price to free cash flow on this. Now at $350, you are paying a 94 or 97 times price to free cash flow with a company doing only $3 billion in net income, spending $20 billion a year for content, and paying $30 billion a year or getting $30 billion a year in revenue. I mean, it doesn't seem like it's that sustainable. Their revenue employee is about 2.8 million. Total debt to equity is about 0.69. Their current ratio is 1.7 on their margins, and their return on equity is also down to about 21%. It's just not something that I think is you could imagine that being justified. If you go to their KPIs, their cash content spend to content amortization ratio is also very interesting. Now, in November, they were spending a lot more for their cash for their content versus now it's spending a little bit less. But still, it's just not enough to justify the price to free cash flow you're paying for this company. All this to say, and again, I think that website was just really cool looking at some of the data. All this to say, I think it's time to buy some puts on Netflix. I think it's freaking stupid, man. This is one of those companies that now don't do this because I'm saying this is just my thoughts on what I feel. And I don't know if I'm actually going to do it. I just don't get it, man. The bull case for Netflix also in the long term that I've heard is interesting. But it's not enough to justify what you're paying for this. $160 billion is this company. That's a hell of a market cap for this company. A hell of a market cap for a company that has relatively no technological advantage other than the media that they create. That's it. So it's the question is what are the strike prices? What are the valuations you want to get this in if you're buying puts? And I think, that's the interesting thing we got to see. Boo Netflix. Mr. Disney. Shout out to being in the chat, Mr. Disney. Hindenburg Research. Oh, yes. Let's talk about the Hindenburg thing. Let's talk about this. This one is interesting. Let's talk about this real quick, and then we'll end this out. Hindenburg Research dropped a new short. For those that don't know, these guys are prolific short sellers, and they basically find companies they think are massively not only overvalued, but are committing potentially fraud. And as a result of that, they take massive short positions on those companies. Hindenburg, let me look them up real quick. They found a new company in India, which makes me sad because I'm Indian, but they found an Indian company that's like, we think they're lying, folks. We think they're not correct. So I just want to show you guys that quickly. Wow, Twitter search is disgusting, bro. I'm trying to type in Hindenburg Research, and I'm getting nothing. Oh my goodness, Twitter search is disgusting. Can't find anything. All right, now I got it. Now I got it. All right, let's show this one. Let's show this one. Everything is subsidized by the government at that scale. Netflix works directly with government and propaganda at every other corporation. Well, I mean, yeah. I don't know about if Netflix is super in bed with the government, but I do know that Netflix just, they're paying too much for content. And that website that I show you guys, when I looked at it, I was like, it's paying a little bit too much for content right now. A little bit too much. Okay, so this is their argument. Here's Hindenburg Research. Today, we reveal the findings of our 2-year investigation. So 2 years they've been doing this, presenting evidence that a $218 billion Indian conglomerate, Adani Group, has engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. Their founder and chairman has amassed a net worth of roughly $120 billion, adding $100 billion in the past 3 years, largely through stock price appreciation in the group's 7 key listed companies, which have spiked an average of 819% over the past 3 years. And these are their companies: Adani Enterprises, Transmission, Total Gas, Green Energy, Power, Ports, all of this stuff. Adani is a very big company now in India. Our research involves speaking with dozens of individuals, including former executives at Adani, reviewing thousands of documents and conducting diligence sites visits almost half a dozen countries. Even if you ignore the findings of our investigation and take the financials at face value, it's 7 key listed companies have an 85% downside purely on a fundamental basis, owing to high sky evaluations. Now, I have not bought anything in the Indian markets. I actually don't even know how to buy things in the Indian markets. You would have to go through a particular broker. But given some of, just the pure fundamentals, one could argue that this has been a bull market for Adani Enterprises and that some of these valuations are sky high. Now, does this research create the ability for people to go more short on the company? I don't know, especially because Hindenburg has historically done short reports. They've not gotten all of them right. Some of them they've gotten very wrong, but some of them they have gotten very right. They say the Adani Group has previously been the focus of 4 major government fraud investigations, which have alleged money laundering, theft of taxpayer funds, and corruption, totaling an estimated of $17 billion. And they've cooperated with offshore cell entities, and it keeps going deeper and deeper. So, I mean, this will be an interesting thing to see how it plays out and if Hindenburg has any juice on this. But I don't know. I don't know if we think that will actually happen. All the scam calls come from this area. Okay, that's a little biased. Not every scam call is coming from India. Okay, there's a lot of other parts of the world that are scamming you. But yeah, I think it has nothing to do with India itself. I think it has to do with Adani, as an individual leader and kind of, ultimately how he's decided to run this company. I watched an interview of him last night, and it's hard to get through it, bro. He's not because of his English is bad, but just because he takes so much time in between speaking. He'll say a sentence and take 10 seconds to say another sentence. So it's hard to listen to an interview of him, but he's one of the most successful mans in India. My comment, it was in reference to how Microsoft did good, numbers are down. I believe Tesla will post very good numbers and retain margins in the 20% with $3 billion or more in profit. Yeah. And Microsoft numbers were not bad. Let me make that very clear. Microsoft numbers, it's not the explosive growth of Tesla, but $59 billion in one quarter is not an easy thing to do, especially while you're managing the Activision trial lawsuit, you're managing LinkedIn growth, you're managing cloud, you're managing this OpenAI stuff. It's just not enough growth for the market to justify a massive price to earnings. And that's the core issue that's happening. Adani is close to the current government, as seen are the Ambanis. This was not surprising. Yeah, I would imagine a government letting a company becoming this valuable in this short period of time has had to have some level of collusion with the government. I mean, at the end of the day, that's just business as well. You're not going to get that rich. You're not going to get that many regulations passed in your favor unless the government is on your side. Senator Josh Hawley has introduced a bill to ban TikTok across the entire United States. The entire United States. Let's take a look at his tweet thread right here. This is important if you own Meta and if you own Google, because TikTok was taking away about $12 billion of revenue from those two big guys in the ad space. Members of Congress and their spouses shouldn't be using their position to get rich on the stock market. Today, I'm introducing a legislation to ban stock market trading. Okay, so that's new because he also introduced. So Josh Hawley is doing some work. So yesterday, he introduced 2 bills then: ban stock market trading, which is important, and banning TikTok. Now, he has called this the Pelosi Act. Wow. He has called this the Pelosi Act. And you know what's so interesting? Pelosi, I saw this yesterday on Twitter. The DOJ has officially opened up a lawsuit against Google to break up its ad technology monopoly. Pelosi sold $3 million worth of Google just 4 weeks ago. And this is the transaction. $3 million. And she made more. She was profitable on this because she selected that she was profitable on her cap gains. So she sold about $3 million of Google 4 weeks ago. And again, even if she didn't know that this was happening, the perception of a, you know, of knowing something that the Department of Justice, when you're the Speaker of the House, was potentially going to pull up a case against the stock that you have a lot of money in, that would cause the stock to go through some turbulence. That perception is not healthy. It's not healthy for democracy at all. It's just not. So TikTok potentially might get banned if this bill actually goes through, and then you've got Pelosi, the Pelosi bill potentially going through. Ishan says scams from here are due to good English plus no U.S. jurisdiction plus long justice cycles plus massive differences in living costs. $10 goes a long way in India. Yeah, I mean, I think we can't talk about the spams without talking about the lack of income disparities and, you know, if anyone goes to India, I've been to India, there's 1.3 billion people there. A lot of them are on the streets. A lot of them make $2 a day, $5 a day, and they have to support their families driving rickshaws. Like, it's a completely different economic environment. I mean, everyone should feel a lot of gratitude if they have a roof and a house and a little bit of money in their bank, because it could be much worse. So you could imagine people are willing to do anything to get out of those situations, and that could result in, you know, things that might hurt other people as well. Daily Cowbell. Yes. All right, guys, I'm going to end the live stream today. We are getting another Daily Cowbell episode today. For those that haven't checked it out, let me just show you the YouTube channel real quick. Thank you, 327 people, for being here. We took a hiatus with the show. The show is back. It has a new host. Tom Nash is not on the show anymore. He quit the show because he just got too busy. Me and him are still good friends, but ultimately he cannot continue doing the show. So now Vitaly is on the show. And we just did our first episode yesterday. We recorded our second episode last night. Highly recommend checking it out. Give the show a chance. It's 22 minutes. Nice little fun banter. Hopefully some in-depth analysis on the market. We talk about the trending news every day. So hopefully this can be your go-to just for a little 20-minute pick-me-up to understand what's going on in the market. And I'll put the channel in the description for anyone to subscribe to. Okay, that's it for me. Thank you guys, everybody. I appreciate you being here. 314 people. Super awesome. I have a Palantir video coming out today. That's an exclusive that no one's talked about on the entire internet. So stay tuned for that. That should be out at around like 11:30. It's going to be a really cool interview, really cool video. It's not an interview, but you're going to see. It's something cool. No one has talked about it yet on YouTube, so it's going to be kind of like breaking on my channel. And yeah, I hope you guys enjoy it. All right, that's it for me. Thank you, everybody. We'll see what happens for Tesla. I'll do a post-earnings live stream with Tevis around 7:30 p.m. I'll see you guys probably in Farzad's live stream. I'll be there for him for Tesla earnings. And the best of luck to all of us Tesla shareholders. I know my position is not the biggest, so I'm hoping for a little bit of a dip so I can buy more of it. But if you do have a big position, hopefully we do see a little bit of green and, you know, we can get the stock in some more positive momentum. All right, everybody. Good night. See you guys tomorrow, or see you guys later today, and then tomorrow, 9:20 a.m. Bye, everybody.